Hi, welcome back. Let's continue with the Chinese stock market. In this episode, we will see what the Chinese stock market's A-shares, B-shares, and H-shares are, and examine how A-shares are actually traded. A-shares are listed companies traded on the two major stock exchanges. They are denominated in RMB or Chinese yuan. Currently, there are 3,849 A-share stocks listed on both exchanges. The index that many investors follow to gauge the performance of the A-shares market is the CSI 300 index. B-shares are listed Chinese companies that are denominated in Hong Kong dollars or US dollars, so foreign investors can directly invest in them. However, B-shares have never been immensely popular, and currently there are only 96 B-shares listed on both exchanges. H-shares are companies that are incorporated in China, but their equities are listed on the Hong Kong Stock Exchange, and they are denominated in Hong Kong dollars. They trade just like any other Hong Kong stock. Currently, there are 281 H-shares traded on the Hong Kong Stock Exchange. Now, let's look at the main board, the Chinese A-shares market, more closely. Chinese A-share stocks do not use tickers like American stocks, which uses abbreviations. For example, the ticker for Facebook is FB. Like most Asian stock markets, A-shares use 6 numbers as a ticker for each stock. Tickers for stocks which are listed on the Shanghai Stock Exchange all begin with the number 6. For example, the ticker for Industrial and Commercial Bank of China is 601398. ICBC is the largest listed company in China by market capitalization and is the biggest bank in the world by total assets. Shenzhen Stock Exchange have tickers starting with 00 or 300. The 300 starting tickers denote that the stocks are listed on the Chi-Next market or the growth enterprise market. Although both stocks with 00 and 300 prefixes are listed on the Shenzhen Stock Exchange, their listing requirements are different. Refer to the exchange's official website on details on the listing standards. All Chinese stocks have T+1 settlement and T+1 delivery, which means that a buyer of stocks cannot sell the same stocks he or she bought on the same day. One must hold the stocks overnight, so there are no high-frequency trading in stocks as done in the US market. Investors and institutions in China can open margin and securities lending accounts. Margin accounts are self-explanatory and gives investors 1 time to 2 times leverage. The securities lending accounts are new. This is to facilitate the shorting of stocks. It is a channel for the seller to locate and secure securities before commencing the short position. However, there are just over 1,000 stocks that are eligible to be borrowed and shorted, since the requirements for stocks that can be shorted are quite stringent. More importantly, even if a stock is eligible as a short candidate, that does not mean investors can locate the shares to short them. It is usually given to brokers' preferred customers. The available inventory for shorts is still limited, but it is improving slowly. The cost of shorting a stock is usually 6 to 9% annualized. Some stocks may have either ST or ST appear in front of their company name. ST denotes special treatment. A listed company that has 2 consecutive years of operating losses will have the ST prefix in front of its name to warn potential investors of the higher risks involved. ST is given to a company that has 3 consecutive years of operating losses and is facing possible delisting by the exchange. A-share stocks also have a daily up and a daily down limit of 10% each. Therefore, stocks are limited to a 10% movement each day, but trading still takes place at the limit up or limit down price. They just cannot trade higher than the limit up price or lower than the limit down price. In January of 2016, Ashares market experimented with the overall market circuit breaker using the CSI 300 index as a reference. However, in the first week of its implementation, the market triggered the circuit breaker on 2 trading days in a week. The second time, on January 7th, the 2 trading halts of the circuit breaker were triggered in less than 30 minutes after the market opened and stopped trading for the rest of the day, and therefore created the fastest daily trading closure in history. On January 8, 2016, Chinese security regulators suspended the circuit breaker rules indefinitely. I hope you have enjoyed this tidbit of information on the Chinese stock market. We'll see you on the next episode. Be safe and be profitable.